try. Good morning, you magnificent MelonHeads. Woo, it's been a couple of days. How you guys doing out there? My goodness, there is so much going on in the world right now. My head is spinning. I can't keep up with these stories. There is a lot to talk about this morning, and I mean a lot. I got a ton of windows open. I'm probably not going to get to everything. I'm going to try. Holy smokes, we got the nickel story going on. We got silver is on a run. All the commodities are going up across the board. Margin calls starting in European banks. We got liquidity starting to dry up. Reverse repos are starting to drop. Oh man, there's a lot going on. Things are moving fast. They're moving really, really fast right now, folks. So don't get caught up in it. All right, that's all I'm gonna say is don't try to outtrade the machines. All right, put yourself in position ahead of time, and then let your strategy play out. All right, if you try to FOMO in after these big moves happen, you're gonna get burned. All right, because there's massive intraday swings going on right now. All right. So don't get caught up in it. If you see a big story out there, like the nickel thing yesterday, don't go pile in the nickel when it's already up 75% in a day. You missed that one. It's okay. There's lots of good trades out there. All right. Real quick, I got to talk about Dallas. What an awesome time I had in Dallas this weekend. I met some just fantastic people out there. It was the Ninja Nation Speak Freely event. We had a good turnout. A lot of great YouTubers were there. A lot of great presentations. I met some awesome individuals, people who got side hustles going on, people who are thinking about making property investments. Some great conversations. Met a lot of folks. Came back with a lot of cards, a lot of email addresses. Just an outstanding time, folks. These are the times to surround yourself with awesome people, okay? And that's exactly what happened in Dallas. I met a lot of just absolutely awesome people, people who see the writing on the wall and are getting out in front of it. I learned so much at these events from you guys and from getting to meet you guys and to hear your stories and to hear your ideas. Just that's the only thing I could say. Use this time, build out your network, make those connections, okay? Because they will be invaluable in the days to come. Now, I could talk about the Dallas trip for days because I had such an awesome time in Dallas. But again, there's just so much we got to get into. So I'm going to shrink my big fat melon of a head. And let's just real quick look at what the markets are doing. Pre-market is 918. We're 12 minutes away from open right now. Looks like the market is about flat. S&P, give or take a point. The Dow is set to open up 20. The NASDAQ down about 30. The big story, though, is your commodities. As always, oil. Hey, what's another couple bucks? Another few dollars in oil. Sure, throw it on. Put a few more dollars in there. What did we trade up to, like 135 in the middle of the night, Sunday night or something like that? Good God, folks. So, homework for everybody. Do not drive home at the end of the day with less than half a tank in your car, okay? Because you don't know what it's going to be when you wake up. Case in point, they're talking about an embargo on all Russian oil today. I'm starting to hear whispers of that story. Oh boy, watch out. And the one thing I've been warning about is keep your eye on the Iranians. Keep an eye on that Strait of Hormuz. I've been talking about that really since last summer. You want to talk about a worst-case scenario for the United States economy, for the world economy? If the Iranians decide they're going to close the Strait of Hormuz, probably at the behest of the Russians, you're talking oil goes to $300 overnight. Overnight, folks, that's a quarter of the world's oil on top of everything going on in Eastern Europe. So do not come home with less than half a tank in your car. All right. Realistically, you shouldn't even do that. All right. I'm keeping my tanks full. I've got my gas cans just in case. And even that, it's not going to solve the problems. It's just going to give you a little bit of a cushion if that ever happens. So keep your eye on that situation in the Middle East, folks. Gold, look at that. Above 2,000. It is great to see gold heading back higher. I think the gold story is only just beginning. We've got a long way to go in gold, folks. A long way to go in gold. Keep in mind, the inflation problem, as bad as it is, and look at that 5-year chart in gold. Let's bring this up. Let's set this to 5 years. Look at this, folks. We're still not even to where we were in August of 2020. All right? Don't you think our inflation problem has gotten a lot worse since August of 2020? I do. I sure do. What was inflation back then? Below our 2% target. Is that what the Fed used to tell us back then? So this story in gold, this is only getting started. All right, so don't feel like you missed the boat on gold. You did not. And silver, look at silver this morning, up another 89 cents at 26.61. And again, the same deal with gold. Look at that price chart, that 5-year story, and we are nowhere near the highs we made either in January of last year or August of 2020. So again, the silver story just getting started. And I got to send a shout out to Brian Zarb, who has been on my channel a couple of times now. Let me shrink or move my melon over here, make sure you guys can see this chart already, because man, Brian Zarb drew this chart to a T. I mean, he drew this thing perfectly when he came on my channel a few weeks ago. And he made this little flag pattern, and at the time he said it just about follows the 200-day moving average. And he said once we break above and retest that, there's really not much resistance between there and 30. And look where we're at here, folks. That is exactly what this silver chart do. So Brian, awesome call, brother. Very good. Welcome back on the channel anytime. And I see Mike Binder, sir. Thank you very much in the super chat. GM all, here's a small donation for a spare phone battery. A spare phone battery. It took me a minute, Mike. If anybody happened to have tuned into my worst live stream ever on Friday, I was on the road, and I tried to do my Friday live stream from my phone while I was out on the road, and right before I started the live stream, I realized I had less than 10% battery. Dope. And also, I started the live stream, and my microphone wasn't working, and I was holding the phone sideways, so it was amateur hour on Friday for my live stream, folks. It was more than a little embarrassing. So that one lasted all of about 2 minutes. So, Mike, thank you very much for your donation for the spare phone battery. Smart Alec. I will do that, sir. Thank you. I'll take that one, though. I deserve that. Rookie mistake. I deserve it. All right. That's fair. All right. Real quick on the subject of precious metals, since we're on this one, I want to show you guys a couple of charts, okay? Gold and silver. This is the chart of GDX. All right, this is your gold miners ETF. All right, and then your purple line, there's your 50-day moving average. Your red line is your 200-day moving average, right? GDX, nice big run. We're well above the 200-day moving average. It's where you want to be. This is a chart now of GDXJ. This is your junior miners gold ETF. Again, very similar looking chart, right? Nice big run above your 50 and above your 200-day moving average. Junior gold miners looking good. Now here is SILJ. This is your silver miners ETF. Almost identical chart, right? Nice big run. This is the one I bought late 2 weeks ago. And again, above your moving averages, looking good. Now check this one out. This is SIL, or SIL ETF. Not much of a move in your silver miners ETF just yet. Actually hasn't even broke out of that channel. Still trading below its 200-day moving average. Now, there's a couple of ways you could look at this. All right. Now, let me just, full disclosure, not a financial advisor, not financial advice. I have not made this trade. I don't own this one, SIL, but I'm looking very closely at it right now. I haven't finished my DD. I don't know why this one hasn't run like the other miners ETFs, like the gold miners ETF, the junior gold miners ETF, like the junior silver miners ETF. For whatever reason, the silver miners ETF is held back right now. Now, that could mean there's something wrong with this ETF. Maybe it's the nationalization of mines or something. I have not done my full DD on this one. I just noticed this trend this morning while I was getting ready for this stream. But this big monster breakout and all the other mining ETFs has not yet shown up on this SIL chart. So the other way to look at it is this one could have massive upside, because once it does break out, it's going to make the same move that all those other ones did. So I'm going to keep my eye on SIL. I'm going to do a little more digging into this one in the days and hours ahead, and I may end up pulling the trigger on this one. Again, full disclosure, I do not own this one, but I'm looking closely at it. All right. Now, another chart I want to talk about. This is something I brought up on my Patreon over the weekend. I put something out, I think it was Sunday night, and I said, be careful with European banks. Watch those European banks. There's something going on over there. There's something brewing. By the way, thank you, and a big shout out to all my Patreon supporters who are out there. Appreciate you guys. Thank you very much for everything you do for the channel. There is a link to my Patreon in the description to this live stream. I want to talk about Credit Suisse right now. Ticker symbol CS. All right. Now, the first thing I want to say when I talk about Credit Suisse is ignore this green that you see pre-market right now, this 4.3% upside, because Credit Suisse has been absolutely brutalized over the last month, and it's due for a dead cat. Okay, so forget that 4% green you see right now. But look at the 1-month chart on Credit Suisse, down from $10 a share on February 9th to under $7 a share now, or $7.18 pre-market, depending which way you look at it. Okay, this is a GSIB bank, a globally systemic important bank. They're not supposed to lose 30% in a month. GSIBs aren't supposed to trade this way. There's something wrong with Credit Suisse, folks. And take your pick, because there's been a lot of really bad stories coming out of Credit Suisse these last few weeks. You had this big money laundering story where they found that Credit Suisse had been holding money for criminals and sanctioned individuals and dictators and people engaged in everything from drug dealing to genocide, going back decades, right? You know, Swiss bank accounts, we all know the Swiss have done this for years. But that story broke, and Credit Suisse was given a pretty hefty fine for that. So that's one really bad story for Credit Suisse, but there's been a few other ones in just the last few days. Here's Credit Suisse. Wealth management clients face margin calls on Russian assets. All right, so any Credit Suisse customers who bought on margin, borrowed money one way or another, right, to buy stocks or something else, and put up Russian assets as collateral, they're getting margin called right now, because those Russian assets, they're all going to zero since Russia has been booted from the SWIFT system, right? So if you have Russian sovereign debt, of which there really isn't that much Russian sovereign debt out there, but if you hold Russian sovereign debt and you borrowed against it, you're getting margin called right now. It means you got to go sell everything you got and pay back Credit Suisse before it's too late. All right. So that story's going on out there. That made me wonder a little bit about Credit Suisse. And then I saw this story in Business Insider. After Russia invaded Ukraine, Credit Suisse asked investors to destroy documents linked to oligarch yachts and loans, report says. And in this article, this is in Business Insider again, Credit Suisse was asking hedge funds and other affiliated organizations to destroy any documents that could tie these loans that are collateralized by Russian oligarchs' assets, i.e. the private jets and all these big expensive yachts that are being seized right now around the world, right? If some Russian billionaire has a yacht and it's tied up in London, the London police are seizing that yacht. They're taking it because of the asset freeze. And UBS is telling their clients, we want you to destroy paperwork that links us to these assets. Why? Because Credit Suisse made loans to people, and these assets were put up as collateral, which means Credit Suisse is losing all the money that they made on those loans, because Credit Suisse can't seize the collateral now because some government just seized it, right? Two people can't seize the same collateral. And Credit Suisse is asking its affiliated hedge funds to delete any evidence to this effect. That does not pass the sniff test, folks. There's something bad going on at Credit Suisse. Now I want to talk about this next article. This is in Wall Street on Parade. I'm not terribly familiar with this website, but it says the big question on Wall Street is which banks owe $41 billion on credit default swaps on Russia, otherwise known as who put up all the collateral, or who insured the Russian debt, Russian companies that borrowed money, who wrote insurance policies on Russian sovereign debt. Somebody out there wrote tens of billions of dollars of insurance policies on this Russian debt that is now effectively becoming worthless. And I got to send a shout out to my new friend Jim, who I met on the plane on the way back from Dallas. Jim, who works in the power sector, or used to work in the power sector, who used to be a volunteer firefighter. So I really hit it off with Jim. Very cool guy. And we got to talking about this. And he mentioned it'll take 30 days because a lot of these bonds If you remember from the Evergrande story, a lot of these bonds have 30-day grace periods. They don't go into default right away. When they miss payment, it starts that 30-day clock. So you might actually see people kind of lulled into a false sense of security here, because they'll be like, well, it's been 2 weeks or it's been 3 weeks since Russia was booted from the Swift system and the banking system hasn't collapsed. I guess we're okay. Well, those bonds don't go into default until 30 days after they miss their payments. So 25, 30 days from now, who knows? You could have $40 billion worth of CDS all of a sudden pops up, gets called up, and now these banks are insolvent. And if you look, Credit Suisse is having people destroy documents. Credit Suisse is margin calling their clients ahead of time. Maybe Credit Suisse is the bank that is holding a lot of this CDS, which right now, you don't want to be holding insurance policies on bonds that are going to zero. Take a look at this. This chart, this was put out on Twitter. This is a Credit Suisse bond credit default swap. Okay, that's a mouthful. All right, this is an insurance policy on Credit Suisse's debt. And look at the price of that insurance policy, what it has done in the last few weeks. Somebody in the market knows something is wrong at Credit Suisse, and they're buying up all the insurance policies on Credit Suisse's debt right now. Credit Suisse is going to zero. I've been saying it for a while. Watch the European banks, whether it's the Russia crisis, or remember, we've still got this housing collapse going on in China right now, the Chinese real estate market. So there's all that debt that's going bad. And I've been saying for a while, it'll show in the European banks first, because the European banks are the most highly leveraged. And then I look at this chart. Now this is telling me Credit Suisse is the one that's going to do it. Again, I am not very well versed in the inner workings of the banking system. I probably know just enough to be dangerous, kind of like the amateur electrician. But all these stories in aggregate paints a very ugly picture over at Credit Suisse. Keep your eye on that one, folks. I know there's a lot of channels that are out there right now calling for bank stocks, saying that bank stocks are going to be a great investment. And I get that the traditional wisdom is that a bank stock does very well in a rising interest rate environment, and interest rates are going to rise. But something doesn't smell right in the banking system right now, and I am not touching banks or financials with a 10-foot pole until I get a better, more clear picture of what's going on over there. And just to add a little bit more fuel to that fire, take a look at this. This is your reverse repos. Remember that story was real big over the summer? This was all the extra money that the Fed printed and dumped into the system, all this excess liquidity. Look at what the reverse repo chart has done these last few weeks. Let's zoom in on that. Remember I said watch the reverse repo chart? That we're going to see the liquidity start to dry up, and when that liquidity is gone, that's when the banks stop lending to each other, and that's when we get a banking crisis. Well, since the end of February, we've gone from $1.738 trillion in reverse repos down to $1.461 trillion. That's $300 billion worth of liquidity has dried up in about 2 weeks. That's a lot of money. And it's happening a little bit faster than I thought it was going to happen. And now, remember, the taper is over. The Fed has tapered. All right? There's only a few days left of this asset purchasing. And then the system is supposed to stand on its own without any easy money. This chart is going to steepen. You're going to see this. Keep your eye on this one, folks. And I want to talk about, this is foreign reverse repos. This is money that foreign banks park overnight at the Fed, their extra liquidity. And that's on its way down. Now, not as big. It's down from $314 billion down to $250 billion. These are weekly snapshots, so we don't get this data in real time. But the story is liquidity is drying up in the banking system. And we've got these European banks are doing all this shady stuff at the same time. All this Russian debt is going to zero. I would not want to be in banks right now, folks. That's all I'm going to say. Steve White, sir, thank you very much for the super chat here. He says, taking profits in energy, buying PM miners. What do you think? Disclaimer, I understand this to be opinion, not financial advice. Thank you for CYing my A at the end there, Steve. I got a very similar question yesterday from a friend, and energy and PM miners, I like both of those right now. I took a little bit of profit in some of my energy investments in ERX and XLE on Friday. I sold a third or a quarter, I forget exactly, of my position. I didn't sell it all. I just took some profits. I'm kind of kicking myself for it because those things have continued to go up. But we never call the top. We never call the bottom exactly right. So that's why you always want to ease in and ease out of your positions. Don't buy it all at once. Don't sell it all at once. So I think you could do well in either one of those categories right now, Steve, energy or PM miners. So I don't see any problem with that trade. I don't see any problem with taking a little profits in energy. Again, the only thing I would say is I think oil and energy has a long way to run from here over the medium term. And I also think the PM miners have a long way to run. So just ease in, ease out. Don't do it all in one shot. Don't FOMO in. But that's a good approach. We'll put it that way. All right. I got to close up some of these windows. I have so many windows open today. There's so many stories. Nickel. Let's talk about nickel because we've got this big commodity story going on. And yesterday, nickel futures traded up. Right now, 68%. It's saying it's up. They've halted. They've shut down the nickel trade. All right. I'm not going to sit here and be like, I called it nickel. No, I didn't. Nobody called nickel. This came out of nowhere. What this was a short squeeze. All right. This is what we've all been hoping silver would do. Nickel did it yesterday. I don't really get it. Why nickel, not copper, not steel, not. Honestly, I don't really get it, but I did find this story. The London Metals Exchange, they halted the nickel trade after unprecedented 250% spike in nickel in the boring trade. If I had a nickel, right? All that. Hello, Onsite Trav. I see you there in FOMO mode. What happened is you had this big shot in China who built up this massive short position in nickel, and he started to get margin called. And so he goes out into the open market. When he gets margin called, he starts selling stuff, and he goes try to buy it. Well, it's not a very liquid market. There's not a lot of nickel to be had. So he starts bidding up the price as he tries to cover his shorts. Next thing you know, the price is up 250%, and the exchange just shuts down. So guess what? The market for nickel broke yesterday. Nobody knows what the fair market price of nickel is right now. So if you say you run a scrapyard and you got a big pile of nickel in your backyard, you can name your price right now, and there's no telling what somebody on the free market is going to pay you for it. This is exactly what we've been trying to say about silver, that there's this massive silver short, this pile of silver shorts, and if the margin calls in silver ever get triggered, that the price is going to run and the market is going to break, and then we'll find out finally what the free market price of silver really is. Now it's happened in nickel. Okay, nickel. Not a very exciting trade, nickel, but hey, if you were in nickel futures, awesome. More power to you. But I think right now this market is effectively broken. And something similar happened in tin. I think it was in the 1980s or the 1990s. I can't remember the story exactly, but something similar happened in the tin market, and tin did not trade in commodities markets for 4 years afterwards because the market just broke. It didn't function properly. And what happened when they halt trading? That means that the metals exchange is worried about counterparty risk. They're worried that the shorts can't pay up. And so they just shut it all down. They just turn it off. As soon as the big guys start losing money, they change the rules and they close it out. That's what happens every time. I heard about something similar happening in grain markets yesterday. I haven't been able to find any stories about it because people just don't cover grain markets that closely in the news. But again, the big guys start losing money. Change the rules. Turn everything off. Shut it down. So that was a really big story yesterday. Again, why it happened, nickel just happened to be the one that triggered yesterday. The margin call started, and that guy had this big short position. He goes out to try to buy it up on the open market, and there's nothing there. There's nothing available. So this is a preview of things to come. We could see this happening in more and more commodity markets right now because we're in a monster bull run in commodities, folks. I mean, take a look. Let's see what's going on right now. The markets are open now, so let's refresh the windows and see what we got. We got gold is up almost 2%. Silver is up 4.25%, 26.81. Maybe we get that monster move in silver sometime soon. Platinum and palladium, the PGM metals, have been on fire lately. Platinum's up 5%. Palladium's up another $100. Over $3,000 in palladium. Oil's now up $6 today. Yeah, throw another dollar on the oil pile. That ought to speed us on our way to economic success. Natural gas, the one thing that hasn't really done very much is U.S. natural gas. Go figure. You know the frackers? Those people that everybody loves to hate? Oh, the frackers, we can't build any pipelines. We can't drill our own gas. Guess what? Right now, shale gas in the United States, the frackers, is the only thing standing between Europe and freezing and starvation. Is United States shale. Did you know that, folks? If Europe wants to eat, if Europe wants to heat their houses next year, they need U.S. shale gas. So I wonder, all those people, all those people with the protesting and everything, and all the people who are making a big stink and making a mess everywhere, trying to block the pipeline constructions, right? Are they going to sit there and say, yeah, let's let that whole continent freeze to death. Let's let them all starve. Or can we finally start pumping some gas here, folks? Or are we just going to tell ourselves that buying it from the Russians is somehow good for the environment? It's better for the environment if you consume the same amount of gas, because you don't consume any more or any less. Consume the same amount of gas, but we buy it from the Russians, and therefore we're helping the environment. Is that what we're telling ourselves? It's time for a little bit of reality in energy policy, folks. I just throw them out there. You guys do what you want with them. I just throw them out there. Again, we've got a lot of green in commodity markets. And nickel, let's see what nickel's doing right now. I don't even think nickel is trading right now. Nope, still not moving. That's still yesterday's price. Nickel hasn't started trading again, so that market is still shut down. Dutch natural gas, TTF hub. All right, here we are. Almost all-time highs. We had a big run Sunday night, of course, like everything else ran. Still close to 200 euros for those Dutch TTF gas futures. And this one's not going anywhere for a while, because now I'm hearing that Nord Stream 1 pipeline might be shut down. The Russians may shut down all the gas flowing into Europe. And I just mentioned that ticker symbol LNG, Schneider Energy. That's one I've been following for a while. I did take some profits in this one at 135 last week. It's up higher than that right now, so I guess I should have left that one in play. But this one's going to run for a while, because this is the company that takes United States LNG, that is $4 per million BTUs, and they freeze it, they put it on a boat, they ship it over to Europe, they sell it in the European markets for probably about $40 per million BTUs. So this company is just making money hand over fist right now. Again, not a financial advisor, not financial advice. Do your own research, your own DD, arrive at a decision right for you based on your unique situation. Now, let's talk about food commodities for a minute here, folks. In particular, wheat. I think I have the wheat chart up. My God, I have so many charts up. So many charts. Well, we'll just look at here. Wheat futures. I want to look at a one-year chart here. Take a look at this. All right. What this is, and I told this story a lot over the weekend, folks. This is people in poor parts of the world starving to death next year. All right. It's already happened. It just hasn't gotten here yet. And not to detract from the human story that's going on in Eastern Europe right now, which is terrible. It's awful. But most of the casualties from this war in Eastern Europe will not be in Eastern Europe. They're going to be in Southern Africa. They're going to be in Southeast Asia. They're going to be in South America. They're going to be in the poor parts of the world where an increase in food prices means starvation and death. All right. Food security globally is a big problem, because I just showed you those Dutch TTF gas futures. Europe will not be making any fertilizer anytime soon. None. All right. All those European fertilizer plants, they're not going to be making anything. They cannot profitably make fertilizer. Belarus will not be shipping any fertilizer. Russia and China will not be shipping any fertilizer. So again, it comes to the United States. He's going to have to produce all the world's fertilizer, all the world's gas, and most of the world's food. Because if you've been following my corn videos, you know the South American harvest has been below expectations. Ukraine is not going to be shipping any food out. So that's Argentina, Brazil, Ukraine. That's the second, third, and fourth largest food exporters in the world, are now effectively undersupplying the market. Which means It's down to the U.S., the world's biggest food exporter. All right, so food prices are going so much higher. All right, they're going higher. It has already happened. It just hasn't gotten here yet, folks. All right, it's like the message has been, like when you stub your toe. You ever stub your toe? And you're like, oh, God, I know it's about to hurt in like 2 or 3 seconds. And here it comes. Ouch. Right? That's the food markets right now. That's what these charts are telling us. All right? It's already happened and we know it's coming. So make sure, I did that video last week about getting a 1-month supply of food for a family of 4 for under $100. I got a little goofy and a little loopy in that video. But there's a reason I put that one out when I did. It's because of charts like this. Okay? Take care of yourselves. Take care of your families, folks. And my investing strategy really since the fall has been eat and heat. It's been food and energy. Those have been my 2 big investment strategies since the fall, and it's still the case. And this story's not going away anytime soon. And same thing. I mean, I've been focusing a lot on corn. I didn't really predict the wheat move, but corn has made a similar run, just not as big. But here's the chart in corn futures. And, corn, that's your animal feed. Let me make this chart so you can see it. That's your animal feed. Corn is used in about 80% of the products in the supermarket, folks. And here's that chart. Straight up. All right. Food prices are going higher. Get used to it. All right. This is the inflation story. It's going to get a lot worse. Be ready for it. If you're watching this, you're lucky enough to see it coming. All right, let's take a look at what markets are doing right now. Take a look at the indices. The S&P is up about 9 points, pretty much flat for the day, up 10. Dow is pushing 100 points, up 94 right now. NASDAQ is up about 20. Crude oil is up $6. Gold 2024 in that big 2000 handle. Silver at 26.70. And the 10-year interest rate on the 10-year bond. That's interesting to see that on the rise today. Up almost 10 basis points, 5.8%. We've got a CPI read coming this week, coming out on Thursday. And then we've got the Fed next week after that. So interest rates are heading higher, even though we've had this flight to safety. And when you get a flight to safety, you tend to get the bond yields heading lower as people pile into treasuries. Well, you've got these 2 big opposing forces now. You have the flight to safety going on at the same time the Fed is hiking rates. So keep an eye on these interest rates. And silver is now up $1 or 98.5 cents. I love to see that. It's my favorite of the shiny metals. Again, keep an eye on that SIL Silver Miners ETF. I'm very curious to find out why this one is still trading below its 200-day moving average when all the other miners ETFs have had such a big run. So there may be a lot of meat left on the bone for this one. Also, I just want to throw this one out there. Russia warns of $300 oil threatens to cut off European gas if West bans energy imports. All right, and supposedly we're going to hear about this in the next day or so, folks. Keep an eye on this story. This could be a very, very big deal. I see Mish is in the chat saying, what about the chart? Okay, I'll show you the chart. I haven't shown the chart in a while because, well, we've had this flight to safety. It's been driving bond yields lower. But let's bring up the chart. All right, there's the chart. I've been saying 2.2% on the U.S. 10-year Treasury is where things start to break. That's this purple line that I drew here. And right now we are comfortably below this line, and we still have all that excess liquidity in the system in the form of the reverse repos. So the big one that I've been talking about, I still think it's a little ways off. It's not here yet. We got close to it, and then when the story in Eastern Europe broke out, that took us down in our interest rates. But 2.2% is the level that worries me. We're going to keep an eye on this chart and keep an eye on those reverse repos and that liquidity drying up. Watch those European banks, folks, because if something starts to break, if we start to see major stress in a European bank, then these rates are going to spike because nobody's going to want to lend to each other. All the banks are going to start playing defense. Nobody's going to know who's holding that toxic Russian debt, who issued the CDS on that toxic Russian debt, and nobody's going to want to be caught holding the bag, so they're going to stop lending to each other. That's how you get a liquidity crisis, right? And we could be a few weeks away from that. Again, you got 30-day grace periods on those bonds. Shout out to my man Jim on the plane for pointing that out to me. So keep an eye on that story. All right, folks, it is about 9:50. I think we're going to wrap it up there. I want to thank you guys for watching. Thank you for joining me. Again, shout out to all my new friends from the city of Dallas and everybody who came out to that event. Thank you to my Patreon supporters for supporting the channel. There's a link in the description to this live stream to that. And until next time, folks, live small and dream big.